Hey everyone, Joe Lentini here. Here's a breakdown of the new state and local tax deduction, also known as SALT. The SALT deduction limit rises from $10,000 to $40,000, effective for tax year 2025. Starting in 2026, the cap will increase by 1% annually through 2029. Then in 2030, the deduction limit will revert to the original $10,000 cap. What is the income-based phase-out? The increased deduction is not available for all taxpayers. The $40,000 cap begins to phase out for modified adjusted gross incomes, MAGI, exceeding $500,000 for single filers, $250,000 for married filing separately. For every dollar earned above the threshold, the deductible amount is reduced by 30 cents. For example, a married couple earning $550,000 in 2025 would see their deduction capped at $25,000, $40,000, 30% of $50,000. Minimum deduction. Even with the phase-out, taxpayers are guaranteed a minimum deduction of $10,000. This change primarily benefits higher income households in high-tax states such as New York, California, and New Jersey, according to SmartAsset. While the higher cap might encourage some taxpayers to itemize, most individuals are expected to continue using the standard deduction. Pass-through entity taxes, PTETs, unaffected. The Act does not alter the deductibility of PTETs, allowing pass-through entities, like S corporations and partnerships, to continue deducting these taxes at the entity level. Important considerations. The increase in the SALT deduction is temporary and will revert to $10,000 in 2030. The income-based phase-out may significantly reduce the benefit for high-income earners. Some analysts argue that the increased SALT cap could lead to a SALT torpedo effect for taxpayers within the phase-out range, potentially resulting in an unexpectedly high marginal tax rate on income earned between $500,000 and $600,000, says CNBC. Please note, this information is a general overview and should not be considered tax advice. Consult with a qualified tax advisor to discuss how these changes specifically impact your financial situation. As always, we're here to help you navigate these new rules and make the most of your tax situation. If you have questions or want to discuss your personal circumstances, please contact our office. We're committed to helping you thrive under the new tax law. If you'd like to schedule a tax planning phone appointment to discuss the impact on you and your family, our special summer rate of $75 for a 30-minute consultation, which is 50% off our regular rate if scheduled between now and September 15th. Then the rate through October increases to $125 for a 30-minute consultation, and finally the full-time rate of $150 will kick in after October. We're here to help you and would love to discuss how we can help you make the most of these new tax laws.